Welcome back to Kryptolytix, giving you a fresh take on crypto analytics, and this is your crypto recap, where I cover some things going on in the crypto space. So let's jump in. Okay, wow. So it looks like we have a bullish Asia session. So generally speaking, Asia doesn't move the market all that much, but we've got some pretty bullish stuff happening in Asia session. We actually have a look back the last few weeks. We've seen that Asia's been pushing the price up a fair bit. If you look down the bottom here on the Bitcoin chart, and there's just some trend lines on there that I just auto draw that I decided to put on there. It's just an auto trend lines indicator. That's something that Tradingview recently added as some of their stock plugins. So it's kind of interesting to see what all trend lines different people will be looking at in terms of diagonals. But so that's why that's on the chart there. But if we have a look down the bottom here, we can see these different time zones. Those are the different trading sessions for Asia, UK, and US, which are I think would be the ones that move the market the most. And we can see if we have a look, I mean, when we're in that perpetual down phase, everyone was bearish, that's fine. But when we felt like maybe we hit a bottom, then things have changed and maybe there's some insiders there. So if we have a look here, back on the 28th of June, Asia was bearish, and Asia was bearish last month, essentially. But I think most of the time you would say Asia was relatively bearish, bit of bullishness there. Let's have a look recently though. So we had a bottom form here, Asia session open, that was the end of the US session on the Sunday night, opening Asia session Monday, and we had bullish price action. And then we have a look again, Tuesday the 9th of July, more bullish price action in Asia. Again, we had this big spike up here in the middle of Asia session. So what's causing this bullish price action during the Asia session? Well, I think most likely the case for that is that there is speculation at the very least that China is likely to unban Bitcoin in Q4 2024, according to some reports. It's also being reported by more than this, but I shared this yesterday. And so there's some potential insiders that know this is happening. So that's causing some bullish price action on Sol at the very least, and other cryptos too. Now, as I'm recording this, last time I recorded a video, we were in the middle of our dump. So I was recording the Friday, the 5th, and I think we got down to about 55 in my recording. And we actually went down all the way to 53K in the middle of that recording. And what did I say when that recording was happening? I said, I'm buying the dip. I said, I'm buying here. Am I crazy? Yes, but, and I gave my thesis as to why I thought it was a really good buy zone there, but we're getting that now. And open interest is on the up as well. You can see right here down the bottom there, that's your open interest. That's slowly creeping back up. We had not very much price action here, but we had a big uptick in open interest. So people are opening up shorts and longs alike. And we can kind of see that if we have a look on some of the liquidity charts. Now I've got a new one that I'm going to be looking at that I've covered in previous videos before, but for hunting liquidity, and that is AgriTrade, which I used to bring up all the time, and then I stopped because I just sort of felt like it lost its edge in usefulness. But they've recently added liquidity to this. So there's a lot of crazy yellow bars, but the way this works out potential liquidity zones is using volume on perpetuals, and the sources that it uses are as such. So the main sources it uses are, we got Binance. It's aggregated by default, but Binance, Bitfinex, BitGet, Bitmart. I mean, it's just pretty much all of the most, even DYDX, Gate.io, it's everything. It's all there, right? So this is really cool. This is a lot better than some of the other ones that I've seen that aren't completely aggregated. This is completely aggregated, I would say, and just about everything is included in this list. Maybe there's a few missing. Well, there's OKX. I thought maybe that was missing for a second there, but maybe some things are missing, but this is really good. So it essentially just uses volume information and then works out what the potential 5, 20, and 100x liquidation zones are based on that. So I did post yesterday saying that I think that we'll probably get a run up to the 61.2 level, but you can see we've just kind of smashed right past that. So the next pocket of liquidity we have above is about 64 to 65K. And to be honest, if we actually take out that and don't just turn back around for maybe one more washout, if you will, and what that would be is we come back up, take this liquidity, come back down for some sort of like fake out essentially, and then run it back up to this top level in the 70K zone, then yeah, we'll just probably continue to move up if that's the case, if we don't get a pullback, because this was the height of the fear. Also a massive, look at how thick and chunky this pocket liquidity is here. Right here, this big zone here, big chunk of liquidity right there. And we came right into it right here and took most of it out. Now it gets a bit spotty down here, so I can see why we probably didn't keep going down into this zone. But this zone right here in terms of liquidity was huge, and that was completely taken out. The biggest liquidation event since FTX. So that puts things into perspective, really. So generally what happens after large liquidation events, it's really common that we get a decent move to the opposite direction. So we had the big spike of liquidations there. Although if you look on AgriTrade, doesn't look like a big pocket of liquidations there. But if you look on other sources, you will see that it was indeed one of the largest liquidation events since FTX. So you can see, at least, you know, since this morning, at least for my time zone, there have been quite a few large liquidations that have taken place, and they're all bears. It's all running right over the bears. We had this $1.1 million liquidation at 62K, and then we've just got all of this going after that. So the next pocket, at least as per this, would be between 63.8 and 65, and 65 is where I thought maybe we would run up to here, but we did not. That's okay. Now, just to go over this chart again, which we had the bullish divergence on the chart. So that was our low right there. It was a bullish divergence. So the low on the RSI was higher, but the price was lower. So that was a good sign that we had exhaustion within this downtrend. And I posted an update last week on X, so go follow me there if you want those updates as well, because that was like that's a 2-3 minute video, so it's really easy to put one of those together just for a quick update. Whereas on YouTube, I like to go into a lot more detail. So what we have at the moment on this Bitcoin chart is we have taken out the 21 smooth moving average on the daily, the 21 week EMA. And again, I mean, weekly EMAs require closes, so that's not really taken out per se. And essentially with moving averages, you like to get mostly like 3 days, I would say, is a good confirmation of a breakout rather than just sort of a fake out, because, you know, for example, the 21 week EMA, for example, we got above it, hit the 21 day EMA right there on our fourth sort of move, is part of this. And I've showed this before a few times, but this is our Elliot wave theory movement. So we had the first move down, then the next move up, that's our 2. And then we had the move to the 3 zone, which was our first test of the 200-day EMA. And then we came back up to test the 21-day EMA. And then rejection from there was the 4. I was thinking maybe we would get up a little bit higher, maybe to the 65K region up around here to take out some of this liquidity here, but we didn't get there. And we stopped at the 21-day EMA. As you can see right there, we went to the 21-day EMA. That's the one there. You can see the color is like a faint blue right there, and that comes up there. So we got rejected from the 21-day EMA, and then we proceeded to come down to this massive liquidity zone here and came into this as well. So I didn't talk about this, but I did say, you know, maybe we'd get a deviation down in this zone. I said that during that video, my last video, when we were around here, that we'd come into this liquidity zone, maybe deviate below the trend line, which is right here, and then start to make our path up from there, and then potentially just range even around sideways here, and then start our move up towards the end of the year. But we'll have to see, obviously, how exactly everything plays out, because we're dealing with possibilities and probabilities at this stage. So it's just about measuring those up. But you can see this this zone here, that was literally on the chart, and you would have seen it in my last video if you watched that. And the way I got that, it was based on this order block here. And so it was a TDSS9 top, and this candle right here, based on its volume, was a significant candle for the breakout of this structure. So I went from roughly the 50% level of that candle, and then just put it to the top of these wicks to work out this box here. That's how this box was worked out. Essentially, it's just this zone as a zone of importance. And you can see we literally just touched it, kissed it right there, reclaimed the trend line right there, got back above it, so not a break. And then we tested it again, failed to break below it. And these wicks here, that was actually a 50% wick fill right there. That's a very bullish candle. Look at that tiny body, and it's just completely been bought up right there. So 50%, another entry, potential entry if you missed down the bottom here. So I was able to get both of those. Personally, I did say I was buying, so I started buying around here, and then I actually didn't get all the way down there at the bottom, but that's okay. And then I added to my long on the trend line there. So I'm actually in a Bitcoin long right now, because also the CVI, my pivot surge strategy, told me to get in as well. So I was just basically buying all along this trend line and in this liquidity zone. So I'm in a long right now. Average entry is about 56, just under 56K, I would say. And we are taking out some of these key moving averages. Now we've got some more above to take out, and we've got this structure above to take out as well. So that's our structure right there. So I would say this zone here is our next resistance zone. We're right in there right now. So is there a potential that the US, when the US or European sessions start, they sort of run us up into here, come down for a final, I would say maybe a shakeout into this now support, which was resistance, is now support. And I'll change that in just a second. And then that could be a nice buy zone right there at around the 60K level, right? We can see right there, the 60K level on the side there, and make people believe that that was a shakeout. And then that's when we start to take out these liquidity zones above. It's looking pretty good at the moment for the chart for Bitcoin. I mean, it's pretty surprising to see just how bullish Asia is. On the weekly, we've got a pretty nice reset on the stochastic. You could see, you know, we haven't actually had a reset since September last year. We came pretty close to the bottom down here when price was further down. We actually did have the stochastic all the way down at the bottom there, but then because of this weekly candle close, now it looks like we've completed our reset right there. So that's fine. I mean, that's pretty far down. Again, since September, that was the last time we had our buy zone. And I would say after this week closes, if it closes bullish again, then I would say it's a pretty healthy reset on the stochastic, not the RSI or stochastic RSI, which everyone seems to talk about, but the actual stochastic. We haven't had a reset. And then the previous time we were there was back in January 2023, which was the bottom of the bear market. So this is the reset that we needed to get back down to some of these lower levels. So we have more fuel for upside move. Now, in terms of the weekly, we never broke out of the bull market. So this is a PSAR strategy that has confirmed that we are well and truly in the bull market. It was quite late at 28K for the weekly one, but at the moment, this one is in a short trade. And I'd closed most of that, and I did post on X that I was going to do this, close most of it down around here. I said, you know, I think it's probably time to close this. Now, I left a little bit open just in case, and because, you know, we might still get another leg down just to shake people out and just do one more test of this trend line, or that maybe that was it. And, you know, the bull market's back. You know, Germany's finished selling as well. It's another thing. And I mean, DGens are sending Bitcoin to the wallet. Have a look here, $317 left, but they liquidated the entire account from 50K to 0K Bitcoin. It's just 0 Bitcoin essentially. And one thing that was pretty funny was, look at this account. Look where this is coming from. What? You can read that on the screen there, I'm sure. That's pretty funny. This is 6 hours ago. Someone also sent an inscription, said, "Have fun staying poor," as in, so they sent a very small amount of BTC and inscribed it with a message, HFSP. So that, which is have fun staying poor, which is pretty funny. So people are just now spamming this with dust and inscriptions, I would say, at the moment, which is pretty funny. But yeah, Journey's done selling, and here is the it is the inscription that I was talking about. So they sold everything, all their Bitcoin, and someone sent them $1.87 with the message HFSP, German government. For those who don't know, that stands for have fun staying poor. So there's our inscription right there. Pretty funny. Gotta love the degens for that. And if you followed me on X, then you saw that I was posting constant updates on the German Bitcoin wallet and how that was going and where it was at. And it was here when I said, Germany's finally finished selling. Let's get on to the bull market then, shall we? Now, this is another thing I thought was quite interesting, is that we had the fear and greed index hit 25. Now, fear and greed hitting 25 in a macro bull market, that's pretty crazy. So the last time that we were 25 was when Bitcoin was worth 18,000. So around down here. So there's our 25 fear and greed level right there. So that's it right there in this cluster. And that's when Bitcoin was worth $17,000. So, or around 17,000, right? And in a bull market, that's an incredibly good buying opportunity, I would say. So just wait for BlackRock market makers to start closing those CME shorts. The tides will turn fast. So what do I mean by that is that that's the basis trade that we can only speculate on, but BlackRock does have market makers, and we, at least a lot of people on crypto Twitter, are in the camp that BlackRock has been suppressing the price of Bitcoin, making money off shorts too, but suppressing the price of Bitcoin so that their spot buys don't move the market up constantly, so they can buy at a lower, if you will, price. So 25 in a bull market, that's incredible. That's, again, I would say it's a pretty good buy signal. And when I posted this, Bitcoin was worth about 56, 57K. So I guess I wasn't wrong with that, since we're hitting 61 at the moment, or 63 almost K. So this is done. We can put this German stuff behind us, and we can say that we got a really good fear and greed reset. We also had that massive liquidation event, which we can see right here. So the biggest liquidation event since FTX, which marked the macro bottom. So there you go, reversal will be terrific right there. We can see huge spike. I mean, it didn't quite get to FTX levels, but it was quite a lot. And again, that's another key reversal sign, right? Now, before we close the chapter completely on the German government Bitcoin wallet, I just wanted to give some perspective on this. You know, people are obviously like, Germany, you know, and I'm in the camp of Germany's given away generational wealth or just gotten rid of it, you know, before 100K, which makes no sense to people who have been in the space for quite some time. But I just wanted to put some things into perspective. So it was January 2014 when the police seized 50,000 BTC from pirate video site Movie 2K at approximately 830 per Bitcoin, which at the time was about $41 million. That's a lot still. That's a lot. So this was just a pirate video website. So that $41 million, it eventually went to $3.5 billion. So that's pretty good. From 41 million to 3.5 billion. That's pretty much a $3 billion profit plus, like 3.5. That's you would say $3.4 billion profit. I would say 3.45, whatever. Like that's pretty good profit. Come on. Like credit where it's due. That's pretty good. And so the site was operated between 2008 and 2013. I would say it was probably 2010 or whenever when they started accepting Bitcoin, I would think, or when it was first available. They started selling on the 20th of the 6th, and that was when Bitcoin was worth around 65K. That's a 6,800% profit. That's really quite impressive. Come on, like that's actually really quite impressive. And so current balance is 0 or dust now. But I just thought I'd put some things into perspective that they still made a lot of money from it. I mean, if they waited for 100K or 150K, for example, then it would have been even more. They would have been like $7 billion potentially. But, you know, that's all right. This is one headwind we don't have to worry about anymore. So this is actually a positive thing. So I think that's probably enough to close the chapter. But I mean, a $3.4 billion profit from something they got for free, you know, I think that's pretty good. And Germany, as I mentioned in my last video, Germany's economy is in a little bit of trouble. So, you know, this has probably been a nice stimulus for them. And people are like, oh, I'll just print it. You know, you can just print fiat for free. Germany's not like America where they have the reserve currency and they can just print unlimited money without any issues. You know, all of the people saying this stuff are American who are used to a US fiscal policy of just printing money and just inflating the currency to insane degrees because they have the petrodollar. No, unfortunately, the rest of the world don't live in this fantasy and have to actually be a little bit more responsible with how they print money. Even if they're not, they still have to be because they don't have a reserve currency underpinning their economy. So, you know, just keep that in mind. You know, people in America that are just saying, you know, you can just print this, you can just print it. Well, yeah, you can, but unless you're America and you have the reserve currency, you can't just do it without any consequence. So anyway, I just thought I'd add that to it as well. So yes, I mean, it sucks that Germany sold. I think that it was probably a bad time to sell, but they had to anyway, because it's part of the law is that assets seized from the proceeds of crime need to be liquidated. Maybe they'll buy back in another wallet and they'll start accumulating again. But at least for this time, they had to sell it because that's just part of the policy. So I think that's the chapter closed. Germany's done. Have fun staying poor, but you know, all that sort of stuff, all that funny stuff. I just thought I'd at least give the justification, I suppose, for it, and show that they made a lot of money still from nothing. I mean, obviously they spent a bit of money on the policing and, you know, finding where the servers were and seizing all that sort of stuff, but nevertheless, put some things in perspective at least anyway, right? And again, that means it's one less thing for us to worry about. Now let's have a look here. I did cover this chart briefly before, but I did just put this in a tweet and I thought it was, you know, summed up pretty nicely. So on the Bitcoin chart, it looks like we've just had a weekly stochastic reset. So that's down the bottom here. As you saw, it was all the way down the bottom there. Bullish RSI divergence on the daily. So again, that was right here, down the bottom there. Wipeout of a large liquidity zone. I showed you already that on the AgroTrade chart. Held the long-term diagonal trend line, which again, as I mentioned, was this one right here. It's currently at a support and resistance zone, and we'll have to see what happens. Well, it's broken that quite clearly. So that's that tweet, and I think that's pretty good. We also had the inflation coming in at 3% after 3.3%'s previous reading. So that was lower than expected as well. But also, if you have a look at Trueflation, it's 1.81 if you have a look at Trueflation. So inflation is definitely coming down. And so probably expect some rate cuts in September, I would think. And that's leading into the election as well, which tends to be, sort of a kind of a bullish phase in the market, as it was in 2020, which is the last time we're in a similar place to where we were now, where at the very end of the year, Bitcoin skyrocketed, leading it into the election. And as for the stock market, people are saying crush alert. This is 1929 compared to 2024. So we've got a very similar price action. We've got this expanded pattern down the bottom here. As you can see, is what he's quite clearly trying to point out there, is that we've got this similar expansion and then a massive move to the upside and then a blow off top. This is what he's alluding to here with this same post, is an expansion here and then a big spike to the upside, and then he's saying that, yep, we're probably getting a blow off top. Now, the difference between then and now is that we are in the winner's curse phase. So what is the winner's curse? So the bears are at it again. We're in the winner's curse phase of the 18.6 year cycle, which is the real estate cycle, but also the markets work within that too. These are all fractal patterns, really, if you think about it. I must admit, parabolic move on the SPX doesn't look the healthiest. That being said, the reset isn't due for another year or so. And I say due, but obviously it could come before or after. But in terms of the 18.6, so the last reset took place in 2007, as you can see here, right there. So the last peak was 2007 to 2008, and adding 18.6 years is about 2025 to 2026. So based on this calculation, the current 18.6 year cycle would be expected to end around 2025 to 2026, as you can see there. This would mean we are currently in the later stages of the cycle, possibly approaching the peak or starting the corrective phase, depending on specific market conditions and regional variations. But I believe that it won't be until then that we start to look for that sort of blow off top. So I still think that this SPX chart has some potential moves to go, maybe some pullbacks, maybe another leg back up, but we'll have to see. But for the most part, I think the probability is higher in the favor of us topping out in 2025, 2026, rather than now, right? Before the election and all that sort of stuff. Also, I was having a look at the Puell Multiple chart. So September 2020, the Puell Multiple was around where we are right now. So Puell Multiple chart here, you can see that was when Bitcoin was worth around $10,000. I remember I was buying pretty aggressively Bitcoin around that level. And you can quite clearly see when we were there, and that's around there, this preceded a accumulation phase or a pullback. You can quite clearly see there. So we got a pullback from a higher level, pullback, a sideways period. You can see there. Here, I'll just zoom in. So you can see we had the pandemic dip. We came back up, reclaimed this level, came up as we recently did. We came up here after a long sideways accumulation, came up, and then we've pulled back, right? So Puell Multiple, we're in that sort of pullback zone right there. Will we just range until the end of the year and then go up to our 100 and something odd K for Bitcoin? Well, that remains to be seen. Puell Multiple, though, is putting in a similar pattern. So we'll have to see how that goes. But at least for now, Puell Multiple in a very similar place to what was in September 2020, which was just before we started ripping up and creating that massive move right there, that huge move to the upside, right? So that essentially means that we'd be right there comparatively if we look at the Puell Multiple. Also, we saw the ETFs buying the dip. So at the very lows, when sentiment was absolutely in the bin, we saw the ETFs scooping up Bitcoin around those levels. All the way down at 55K, 56K, we had what you can quite clearly see, the buying step back up after this lengthened period of selling. Interestingly enough, these big spikes actually marked local tops. So if we see these big spikes in ETFs again, then maybe that's something we could potentially counter trade or have as a warning sign, if you will, that there's too much heat in the market and that maybe it's time for a cool off, right? So these big spikes here. Now we didn't get a big capitulation down here. We just got gentle selling that went down with price, but you can see we're definitely picking back up again. If we go have a look at that coin glass chart live, then we can see right there that, yeah, I mean, it's still sustained, this buying pressure, right? This buying pressure is still sustained. Nothing too crazy, right? Nothing too crazy there. Right here though, look at this big spike, this big sell spike right here. It wasn't the absolute low, but that was pretty much the same low that we had right here. But maybe that's a divergence, yeah? How's that? Maybe that's a divergence, right? Lower low on price, but nowhere near as low on the ETF selling. That's another thing we could consider potentially. I don't know. I don't know how you feel about that, but you can see definitely that the ETF flows have remained green throughout this period here. So decent support, right? We also had decent buying back here when we were forming this low right here. So that's what we're looking like on the ETFs at the moment. Definitely some buying pressures stepped in, and this low is being bought. And I think next time I see something like this, I think we all should consider, if we see a massive spike like that again, like we had at 71,500, we should probably consider that as a danger zone point, right? So these big spikes here, maybe we have to factor that in next time if we see these big spikes, and maybe these are a counter trade signal. So there you go, something to consider, right? Something to consider. In terms of bullish news, or is this the bottom, or what do you think? This is my thinking on it at the moment, really. We got the Mt. Gox repayments were delayed. Now, what do I mean by that? People got a letter. I didn't really hear anyone talking about this, but we saw the letter on the 5th of July clearly state that we asked eligible rehabilitation creditors to wait for a while. So the only thing we saw with Mt. Gox was their coins were on the move, right? The coins were on the move, but what does that mean? If they still have to wait, well, that's not really a headwind for us. So essentially, repayments delayed. We've got Germany finished selling, and that's, you know, completely gone now. All this is gone, right, since June. But that's something we can cross off. Minor capitulation. So the 90-day period is actually kind of interesting. I keep talking about that because everyone else is as well. But, you know, I could go into that in detail, but it really doesn't go for 90 days exactly. But, you know, we'll have a look at that in a second. But the end of July would be the end of that 90-day period that everyone keeps talking about. Largest liquidation event since FTX. The Bitcoin held a key support level, didn't break down. And so that's really good. ETFs buying the dip, and the Bitcoin bull trend is still intact. What else do you need? Smells like a bottom to me, right? What does it smell like to you? It smells like a bottom. Now, in terms of minor capitulation and the 90-day period, we don't necessarily go into minor capitulation after the halving every time for 90 days, right? Which is what's being rinsed and thrown around everywhere. So let's have a look at the 2020 halving, right? So this is a 2020 halving. So these blue lines are the halving points. So that's what the blue lines on this chart are. And this is the hash rate, right? So we had in 2016, we had about 35 days capitulation, and then we went back up. This was the bottom of the bear market, so this doesn't really count, but this one went for 63 days. We had the July 2020 halving, and the most we had in terms of capitulation was about 30 days there, and then the pandemic crash was about 63 days, right? And then so this halving we've had so far 70 days. So this is actually one of the longest minor capitulations that we've had. People keep talking about 90 days, but I don't really know where that came from. We had also back in 2012, we had 50 days minor capitulation after that one. So, I mean, everyone keeps talking about the 90-day minor capitulation. I don't know where they're getting it from, but at least, you know, if that is the case, then that comes to a close, I would say, in, maybe August. If you go from the start here, you did say we started coming down, but we'll go from the halving. There's our 90-day period right there on the 22nd of July, which is next week. So there you go. That's it done. And hopefully we start to see this come back up. This is an oscillator view. We can also change it to a ribbon view. And if we see this start to come back closer together, especially if we look on a daily chart, then that'll be good. But at least for now, I like to look at it as an oscillator, and we'll have to start to see how this goes over the coming weeks. I suspect that will probably start coming up back to the baseline, and that will be the confirmation that the minor capitulation's over. That'll be around October. And then that's when we can start the bull market again and start to see some of this green stuff again, which is what we want to see. We want to see more green stuff on the chart. So that's that. I mean, if we look at the weekly chart or the cycle chart, I mean, it's looking pretty good at the moment. We do have a pretty major resistance at about 65K. That marries up to a lot of other things as well. That's our underside resistance zone right there as well. And then we also have the bull market support band line, which is this one right here, sitting at the same level. So that's definitely a key level to watch. But so far it's looking pretty good, I would say. And I mean, this bullish price action during Asia session is pretty impressive, really. And we can see with all of those trend lines, these are all the potential trend lines that people are looking at, right? All of them, every single one that people are looking at, depending on how they draw them, right? So if we have a look here, in terms of all the potential trend lines people are looking at, we had a break here and a break here. This is two key trend lines. So, you know, if we have a look back at where these are being drawn from, we've got right from here to down here, we've got from here to the same place, and we've got the ones started all the way back up when BTC was sitting at the 72K level. So there you go. So that's all the trend lines people are looking at. And now they're looking at these ones too. I mean, this is crazy, this spider web of trend lines. We also had a breakout of this one too. If you draw top side trend lines, which I don't, is in like diagonal up like this. I just think that's kind of rubbish. I don't think that that's worth taking into consideration, in all honesty. But I mean, we've broken out of that one too, if that's something that you use to trade, which I don't, but you know, maybe you do, and maybe that makes sense to you. But these are all the potential trend lines that people are looking at, and we've broken out of all of them, at least all the diagonals, right? We definitely have resistance right here, and that would be because of this order block right here and this underside resistance. But at least for now, we had a decent run into this level. So if we can hold here, then that's pretty strong. That's quite strong. And even if we get a pullback down to around the 60K level, then maybe people will freak out, and that'll bring the fear back, and that'll be the sort of ultimate time to load up. And I think at this stage, any pullbacks are probably worth buying at this stage. So that's kind of what I'm looking at the moment. And just to wrap it up, and just one final chart to look at. Now, in terms of the moving averages on the higher time frame, so look at the 3-day chart here, and then have a quick look at the volume profile, just so we can get a gauge. It would be these moving averages. Now, it seems like we're taking out all of them, right? Every single one. Now, taking out, that's a 3-day chart. It's a 3-day candle. We still have 2 days to go to close the 3-day candle, so it's not like we're there completely. But we've taken out the 20-week, 21-day. Again, weekly requires this to close above here and not just get rejected throughout the week, which could happen. But we've taken out the 21-day, the 200-day SMA, and the 200-day EMA, all currently being taken out as we speak. So that's a pretty strong move. That's a pretty strong move. And I think my last video, we were around here. We never closed significantly below that long-term trend line. In terms of volume, key levels to hold would have been around the 58 region, I would say. Like, let's just put that cursor there, 57.5, which we did deviate below, and we've snapped back into the range. And then I said the next spot where the volume was down at 52K. Now, we didn't quite get down as far as there. This level right here was defended, so we didn't quite get down to this area, but we did get to this significant candle here, and we touched off it, and then we never closed below that 55.8K level. We never closed below there on a 3-day candle. So that's quite important. You can see we were defended nicely right off that trend line, which is really good. And then held this 50% level here and reclaimed that. And then now we're taking out all these moving averages. So it's looking pretty good. I think the next major volume support, we're at it right now. Have a look here. I did say that this would probably be the next resistance from people who are underwater. So again, what happens a lot of the time is that you get with these big volume candles like here and here, you get a lot of trading taking place at these levels. And then when price comes back to there, after it's come down here and freaked all these people out, comes back to there, these people that were underwater essentially start to close their positions. So that's why you get resistance. It's the locked in range analysis or underwater thesis. And I'd say the next spot for that potentially to take place is there. And then we've got this trend line right here. So again, that brings us to the end of September if we just kind of ranged around here for a while and then attempted to break out by the end of the year, which is Q4 November. So that's when we hopefully get some more green. Anyway, that's probably enough. So that's probably enough for today's video. I hope you liked it. I hope you found it helpful. If you did, then please give the video a like, subscribe to the channel if you want more content like this, and go follow me on X if you want all of this in real time before I can do a long form video on it. I do occasionally also do some very short TA updates on there. So if you want all this condensed into like 2 minutes, I do it over there. And hopefully I'll see you on the next one. Keep safe out there. This is Kryptolytix signing out. Have a good one.